Black Friday wrapped up a solid week for the markets. The Nasdaq and the Dow rose 0.6%, with the S&P advancing 0.5% in a holiday-shortened session. That gives the Nasdaq 5 straight winning days and all the major indexes their best weekly performance since late June. This ties directly back to what I laid out this morning in my newsletter. The big driver remains the expectation for the Fed rate cut in December. Markets are now pricing in an 80 to 85% chance of this happening after being as low as 20% last week. The market firmly sees us in an easing cycle into the new year, and risk appetite has returned. And now, even with today's rally, November still finishes as a losing month for the Nasdaq, down almost 2% after the recent pullback in tech. That's exactly why I said earlier in the week that portfolio managers who are lagging are likely going to have to chase this into year end. You're already starting to see that with the S&P and the Dow pushing higher, enough to keep their 7-month winning streaks alive. This week alone, the Dow gained more than 3%, the S&P almost 4%, and the Nasdaq more than 4%. We spoke about a broadening market in my newsletter this morning also. Small caps have been leading, equal weight has been outperforming, and the risk on sentiment is starting to show up on the tape. If this fits perfectly with November bottoming pattern that we've been tracking. Last week's capitulation marked the low. Seasonality turned positive, and the Fed got more dovish. And now that the market is starting to follow through on those things. So the setup heading into December remains intact. If the data holds steady, I do expect a strong push into year end. For more insight like this, check out my daily newsletter, published in the morning in the pre-market session. It's institutional level insight right to your inbox.